And thank you for joining me today. I'm really excited to talk about homebuyer education. My name is Allie Smith. I am the newest associate with the Sokolov-Miller Family Financial and Life Skills Center here at Penn State. In the last 2 years, I actually have been working full time in real estate as a realtor. So I'm really excited to come into this role and share all this knowledge that I've gained in the last 2 years with you all. And I will say I've worked through this home buyer journey and process lots of times with my clients in the past 2 years. And I'm here to tell you that the more informed that you are throughout this process as a home buyer yourself, the less stressful and more exciting it will be for you. So before we get started, I would just kind of love to see who's in our audience today. So I'm going to send a poll out just to get an idea of where you're coming from and who you are. So what is your primary affiliation with Penn State? And while you're thinking about this and filling this out here, I will introduce our student ambassador that we have on our chat today. His name is Jackie. He joins all the webinars. He's more seasoned in these webinars than I am at this point. So he'll be managing the chat as I'm talking about things and mentioning things. He'll put links in the chat for you to check out. And if there are any like simple questions that he can answer for you, he will just go ahead and type those in the chat. Otherwise, we'll talk through questions together at the end of the webinar. So it looks like lots of undergraduate students, lots of graduate students, even some alumni and some staff and faculty, which is fantastic. Thank you for joining. I would also love to know, why you're joining this webinar today. What are you hoping to learn? Where maybe are you at in your potential home buying process? So I am going to launch one more poll to ask how you would describe yourself. Are you preparing to buy your first home? Have you already purchased a home and you're maybe thinking about purchasing your next home and you would like a refresher, or you're not really sure, but you just want to, be really educated? Nadia, I'm hoping I'm saying that right, is also working to become a real estate agent. That is fantastic. So you'll learn a lot today about like the process of buying a home. And if you have any specific questions about going into real estate, I could probably answer those for you as well. Okay, so this is great to see kind of where we're at, what we're thinking. Awesome. So now that I have kind of gotten a feel for where you all are at. Again, I am very excited to be here. Buying a home is one of the most exciting things that you can do, and it's a huge step. And from experience, I can say it can be a really stressful process for some people. Like I said, it seems to me like the more informed and willing to learn people are throughout the process, the less stress they typically experience. A home is likely the biggest purchase or one of the biggest purchases you'll make in your life. So it's really crucial to understand the financial process that goes along with it. So before we dive in here, I just want to take a minute to introduce you all to the center services and the different things that we can offer to the Penn State community. So first of all, we've got our one-on-one appointments. These can be scheduled through Starfish. These are confidential one-on-one financial coaching appointments where we really delve into your personal finances, help you work through issues, and help you achieve financial goals. These are a great opportunity. This is basically, free financial coaching that you have access to. We also do obviously group presentations and webinars. We not only have these webinar services here, but we also offer in-person and online group presentations. These can be scheduled for classes, clubs, and other groups. we've got our self-study modules. These are open to the public and these are self-paced. So if you're thinking of dipping your toes into financial literacy but aren't quite ready to talk with someone one-on-one, the self-study modules are going to be great for you. We also have a mentoring program where current students can connect with an alumni, hopefully someone in the industry that they're hoping to go into. And you can talk about finances, financial goals, and also just general mentorship from someone in your future industry. Our newest offering are our workshops. These are like presentations, kind of, but they're more hands-on. So instead of learning about a credit score, you'll actually go ahead and pull your credit score. Instead of learning about budgeting, you'll actually start to build yourself a budget. These do have limited availability right now, but it's something we'll be opening up in the future. So for all of our services, you can find out more about them and look into how you might schedule them at our website, financialliteracy.psu.edu. So let's dive in here to Homebuyer Education. First, I want to introduce Ed. So this is Homebuyer Education. This guy is Ed here. He is going to be guiding us along our journey today and teaching us a lot along the way. So when you're thinking about shopping for a house, one of the first things you want to consider is your budget. What can you afford? So as you are exploring Zillow and window shopping and whatnot, you want to make sure the properties that you're looking at are realistic for you. So your personal budget is a great place to start. Here on the screen, we have a healthy budget template. This may look a little different for everyone, but it's a great example. There are a few things I want to point out about this budget before we really look into the housing piece here. So the first reminder on this budget is that it is based on your net income, not your gross income. So your net income is what you're actually bringing home after taxes and deductions are taken out. So it's very important that we are budgeting with the money that we actually have, right? The second thing I want to point out about this budget is the piece that is number one here, and that is saving. A general guideline of financial literacy is to be saving at least 10% of everything you're bringing in. So you want to pay yourself first before you spend your money, right? So now let's look at this housing piece. Ideally, based on this healthy sample budget, we should be spending no more than 30% of our monthly net income on housing. So if we're talking about a mortgage, ideally we want to be spending no more than 30% of that monthly net income on our mortgage payment. This will include all components of your mortgage, which we'll talk about later. But it is really important to get an idea before you even start thinking about looking at homes of what that monthly payment will look like. We'll talk about how this may translate into a home's purchase price later, but we're going to start with this budget. So let's say our buddy here, Ed, makes $50,000 a year. That's gross. That's before taxes and deductions. So his net income would be about $37,500 a year. Monthly, this net income is $3,125. So this means that to keep his monthly mortgage payment under 30%, he should aim to spend no more than $938 on his monthly housing payment. We can all do this math. Hopefully we know at this point what our net income is, what we actually bring home every month. You can take 30% of that. And right now, if you do, live on your own in an apartment, or I don't think anyone said they currently have a house. So if you live on your own in an apartment, you might compare, are you spending less than 30% currently on your housing expenses, or are you spending more? So again, we will talk about how this monthly housing budget will translate into a home's purchase price a little bit later. But now we just have this number in mind. For Ed, it is ideally no more than $938 a month. It's important to be thinking about this now or before you buy a home, right? Before you make this commitment, because you're going to be paying your mortgage likely for between 15 to 30 years. So this is a very big long-term decision, right? And there are some questions you may want to ask yourself as you are determining your budget and making choices around your home purchase. These are some great examples. What can I spend monthly on housing? Well, we kind of already touched on that, right? Ideally, you want to be spending no more than 30% of that monthly net income. And if you've got other things in your budget that you are considering, maybe your budget looks a little different from that budget that we saw on the last slide. You might even be comfortable spending less on housing, right? If your debt is more than 10%. Things to think about. Do you have an emergency fund? So, homes, unfortunately, can break, things can go wrong in them. And unlike renting, it will be on you to fix the things that need fixing, right? How much down payment do you have saved? 20% of the home's purchase price is a great goal, but you don't actually need to have that much saved to purchase a home. It is possible to purchase a home, depending on your situation, with as little as 0 to 3% down. So, how much down payment do you have saved? It's also crucial that you don't spend your entire savings on your down payment and your closing costs. Because, like I just talked about, having an emergency fund when you're a homeowner is going to be even more important than when you're not a homeowner. Because when things go wrong, you can't call up your landlord, right? It is on you to take care of those things. So, when you're closing on your house, when you're thinking about saving this money, you really want to make sure you're not having to dip into that emergency fund at all because we need that. Also, do you have any big life changes coming? Potentially, maybe starting a family, maybe getting a new job, starting a business. These are all things to think about because this mortgage payment, again, is going to be part of your financial life for anywhere between 15 to 30 years, and that's a long time. Another question maybe you could ask in terms of having big life changes. If you are currently a dual income household, will it stay that way? Or will one person maybe be taking some time off of work to care for children, that kind of thing? One additional question I would add here is, when you buy a house, how long do you plan to stay in the home that you buy? I will say ideally it should be over 5 years because the housing market can fluctuate just like the stock market fluctuates. And you want to make sure that you give it enough time that you'll be able to sell your house for more than, or at least for what you paid for it. And planning to stay there for at least 5 years is a good way to um, mitigate risk in that way, right? Make sure that you'll be able to sell it for a little bit more than you paid. Buying a home is an investment, and we don't want to be losing money on this investment. So, we're going to talk about pre approval and kind of what that looks like. But before speaking with a lender to get pre approved, you want to have a solid idea of your own budget and your own finances. You want to be asking yourself these questions and also talking through these things with other decision makers in your life in the home buying process. So, that could be a partner, right? If you neglect figuring these things out on your own and you go and talk to a lender and get pre approved first, they will likely give you the maximum possible pre approval that you qualify for. And if you just kind of run with that and say, I got this pre approval, this means I can afford it, you might overspend on your home because you haven't done your own due diligence based on your own personal financial situation. Again, we want your first home purchase to be a good decision that sets you up for future financial success. We don't want you to be house poor, and you are in control of this process. So now that Ed has done his due diligence, he's looked at his budget, he's kind of started to figure out how much he can afford to pay. He can start researching properties, and you can see he's getting excited about this. He's looking at Zillow. Um, and I will say, Online real estate resources like Zillow and Realtor.com are actually really great resources. They connect directly with realtors' platforms. So, as soon as properties are listed on realtors' back end platforms, they're posted out on these sites for the public to see. So, browsing Zillow is absolutely a great way to kind of start your home search and start to see what's out there. Here on the screen, we have some examples of things that might help guide your search when you're thinking about what you're looking for in a home. So, location, that's a big one, right? Do you want to have a long commute or would you rather have a short commute? Age and condition of the home. Are you looking for any specific renovations done, upgrades and updates in the home? Square footage, how big would you like it to be? How many bedrooms and bathrooms? What type of home? Are you looking for a two-story or a ranch? Are you looking for any specific type of acreage? Do you want a big yard? Would you rather have a small yard so you don't have to mow? And school district, of course, is a big one as well. So I would love to see in the chat what is most important to you in a home. And before we go there, I would add one more thing to this list, and that is affordability, right? Affordability is maybe arguably the most important factor in searching for a home. I see location, that's a huge one. I'll let you guys think about that. Location is a good one for sure. And so for most of us soon to be first time home buyers, typically with a starter home, you can't get too picky, right? You may need to choose one or two priorities along with affordability and kind of start your search there. So, maybe your top three things are location. Maybe you need at least two bedrooms. And of course, you're looking for homes under a certain price point. I'll plug Zillow here. Zillow has a really great draw feature where you can draw a circle around the location that you would, be willing to live in or look for a home in, and you can put in all kinds of other details like bedrooms, bathrooms, square footage, all of that stuff, and it will really hone in your search. And of course, price. You can put price in there, so you're only seeing homes that fit your criteria. Looking at price per square foot will give you as a home buyer a sense of where a listing sits relative to other listings on the market. So this can be a really great comparison tool to look at different homes and see how they're priced in comparison to each other. And that screenshot is actually directly from Zillow. So that's something you can easily see online is price per square foot. So, as homebuyer Ed is researching and getting organized, he is reminding himself that he is in control of this process. And that is absolutely right. As a home buyer, you want to do your due diligence so that you are the one in control of this process. Some additional things you might think about here are your must haves or your needs versus your wants. Like I mentioned previously, if you're looking at starter homes, you may not be able to check all of those wants off, right? You may need to prioritize one or two items only. How long are you willing to search and when do you want to move in? The more criteria you need to meet with the home, the more likely it's going to take longer to actually find that home, right? So another thing I want to mention here regarding timing is after you close on a home, so you went through the process, you have chosen the home, you got the loan, you're closed, and you are the owner of that property. You don't actually make your first mortgage payment until 1 full month has passed. So let me explain that. If you close on your home June 15th, you won't make your first mortgage payment until August 1st. So we've got that second half of June and 1 full month, that would be July, that would bring us to August 1st. So that is important because if you're someone who's trying to coordinate a lease end date with the purchase of your home, and the closing of your home, this buffer here can kind of help prevent you from making a double housing payment. So that can be helpful. How will you remember, evaluate, and rank each property you see? You may end up seeing a lot of different homes, and I would definitely recommend coming up with some sort of process to stay organized so you can remember what you liked and didn't like about the homes you've seen previously. I always tell my clients I'm sorry, searching for a home is a learning process. As you go through this process and you see more and more homes, you'll realize more what you like and what you thought you liked, but you actually don't. Like maybe you thought you wanted a two-story home and you've seen a few of them and you're like, we don't actually like those. Maybe what we want to go with a ranch. So it is a learning process. I would encourage you to keep an open mind as you're seeing different homes and of course have some sort of process to keep yourself organized. Remember, oh, we really liked this. We didn't like this. Whether that's an Excel sheet, maybe a notepad. If you want to keep it simple, even like notes on your phone can be helpful. But before you dive in and start seeing places, you definitely want to have something like that set up for yourself. And also, what are taxes and insurance for the location that you are, the location you are thinking about buying? I would encourage you again to check out Zillow, check out the location you are thinking about purchasing a home, and look at those property taxes. They will be listed in yearly amounts, but you can divide that by 12 easily and come up with a monthly amount. Taxes really tend to vary in different areas. More populated city type areas tend to have higher taxes, whereas more rural areas tend to have lower taxes. So location plays a big part when you think about taxes. And taxes and insurance will be part of your overall mortgage payment. We're going to talk about that later, but I'll say this a few times because it is very important that you don't forget about these. And of course, as part of the preparation process, you'll choose your realtor and your lender. This will be your team who will get you through this home buying process to the finish line. So they should be honest and trustworthy. You want the people on your team to be representing you and your needs, right? Your realtor will assist you through the home buying process from start to finish, explaining the process, educating you on the market conditions, helping you do paperwork, negotiating on your behalf, and fully representing you through closing. It is free to work with a realtor as a home buyer because the seller pays both the buyer's agent and the seller's agent commissions. And I want to just take a minute and talk about the different types of agents and representation that exist out there because it is important that you understand that as a future home buyer. So there's a buyer's agent. That is a realtor who is their job specifically is to represent you and your best interest as a home buyer. So again, they'll negotiate on your behalf. They will educate you on the market. They will do all of your paperwork for you. They'll represent you. There's also the seller's agent who will be doing kind of the same thing on the seller side, fully representing the seller in their best interest. So if you've ever driven by a property for sale and seen like the person's face on the for sale sign, that is the seller's agent. They're marketing that property for the seller. There's also what's called dual agency, and that is when one person, one realtor, represents both the buyer and the seller in the transaction. This is legal in Pennsylvania, and I think sometimes buyers find themselves in this situation when they see the for sale sign and they just go ahead and they call up that listing agent to also represent them as the potential buyer of that property. And it is okay to do that, but personally, I think home buyers will be best represented by a buyer's agent specifically. So someone that's just representing them and not also representing the seller. As for the lender, you can choose any bank you like for your mortgage. You can go with the bank who has your checking and savings accounts if you want, if you're really comfortable with them. Most times, if you don't want to do that, your realtor will be able to connect you with a good lender who has done really great work for their clients in the past and who they have a good relationship with. Your lender will be the one who pre-approves you. They'll talk about the costs associated with your home purchase, things like your down payment and your closing costs. They will help you see what types of loan programs or grants you may qualify for to help you save money on your home purchase. A lot of banks, or lenders rather, have specific first-time homebuyer loans, and these differ from bank to bank. They have different products that kind of do different things, but a lot of times these first-time homebuyer loans will allow the homebuyer to make a small down payment, smaller than 20%, and not have to pay private mortgage insurance. And that might not make sense right now, but we're going to talk about that in a minute. But just know, like, whenever you're speaking with a lender, and if you're a first-time home buyer, you want to be asking these questions. Do you have any first-time home buyer loans? What are the qualifications for that? I want to touch on for a minute also, like how to find a realtor. Um, I would suggest when you're ready to buy, asking homeowners that you know in the area where you want to live and buy your home, who they used as their realtor and how their experience was. Ask them to be honest and if they would suggest using the same agent. Also, before you choose someone, make sure you check out reviews. Zillow, Realtor.com, and even like Google business pages are all a great source for realtor reviews. Before you commit to a realtor, you should definitely make sure they are a good fit. Different realtors have different working styles, and you might be working with this person for a long time, depending on how long it takes you to find a home. So you just want to make sure you jive. So again, this is your home buying team. These are going to be the people that guide you through this process from start to finish. You want to make sure you trust them. You want to make sure they're honest because ultimately they will be representing you in one of the potentially biggest purchases of your life. You will work directly with your lender to get pre-approved. And in order to submit an offer on a home to, start the process of potentially purchasing a property, you do need to have your pre-approval document in hand. So ideally, you want to make sure you have your pre-approval ready before you start going out and touring homes with your realtor. There is a difference between pre-qualification and pre-approval. A pre-qualification is based on information that you give the lender, whereas a pre-approval is based on facts. So they will run your credit score. They will verify your assets and your income. And of course, in order to verify these things, you'll have to submit documentation. So a pre-approval will give you a hard inquiry on your credit report. But even with that being said, as a home buyer, you can and should shop around for a pre-approval. You can get multiple pre-approvals from multiple lenders and have it only count as one hard inquiry on your credit report as long as you do it in a short period of time. So like in 2 weeks. Some buyers opt for at least 3 pre-approvals before making a decision on a lender. And the idea is you just want to shop around to make sure you're getting the best interest rate and terms on your loan for your situation. So in order to give you a pre-approval, these are some of the things your lender will be looking for. Information and documentation and things you'll have to submit with your application. And I want to touch on the first one here, the application fee. This is one of the upfront costs of purchasing a home. So when you pay your application fee, you'll pay for your appraisal and your credit report. This is usually about $600 total. And you won't pay this to your lender right away. You actually won't pay this fee until you find a home and you go under contract on it. So when I say under contract, if you've ever seen on Zillow or Realtor.com, like pending, sale pending, those homes are all under contract. They have been purchased by a buyer and they are just on their way towards closing. They're going through the transaction at that point. So that's what under contract or sale pending means. So once you go under contract, you'll pay this application fee. It's usually about $600. This covers the cost of your appraisal and your credit report. So you don't need to pay this when you're getting your pre-approval, but you do want to have it set aside in a bank account ready to go because this is going to be one of the first costs associated with purchasing your home. Otherwise, these are some of the documents you can prepare, some of the things that you can expect that your lender will ask for when they're giving you your pre-approval. So now that Ed has figured out what he can afford, he's done his own research, he is ready to start moving forward with really learning about his mortgage and what this will entail. It is so important that you understand what a mortgage is before you start shopping for a house. You want to understand what you're getting yourself into, right? So, put simply, a mortgage is a loan for a property. The property serves as collateral. So, if you don't make all the payments, the bank can step in and take that property back. A mortgage does have predetermined payments. I will say that's one of the really positive things about getting a mortgage is that as long as you have a fixed interest rate, and we'll talk about this in a second as well, those payments will all be the same. If you have a 30-year fixed interest mortgage, you are going to make that same payment for 30 years. So a mortgage is kind of inflation proof in that way, right? Rent would certainly go up in 30 years. Your mortgage won't. Taxes might go up a little, but your actual payment, paying down that loan balance, that will not change. So let's look more closely at the components of a mortgage here. Your actual mortgage payment will be made up of all of these things. Principal and interest, that's you paying down that big balance that you borrowed in order to buy the home, right? But there's also property taxes and insurance, and we talked about this a little bit already. But what you can do to get an idea of what property taxes might look like for you is go onto one of the real estate sites, Zillow, Realtor, look at what property taxes look like in the area that you're potentially going to be searching. And property taxes are going to be different for every single house. So you're not going to be able to tack down exactly what that payment is going to look like, but you can give yourself a good idea. If property taxes in the area that you're looking typically range between $1,000 and $2,000 a year, you can absolutely budget for that. Your property taxes and your insurance will be paid via your escrow account. An escrow account is really just a holding account. You will pay all of this to your lender on a monthly basis when you pay your mortgage. You'll pay your principal, interest, property taxes, and insurance all together in one payment to your lender. And your lender will take care of paying your taxes and your insurance on your behalf. So I've said this a few times, I think now, but it is really important not to forget about taxes and insurance when you're planning because these can add up to an extra few $100s, and that could quickly kind of throw your budget out of whack, right? Some lenders also will allow you to pay your own property taxes and home insurance premiums, but they might raise the interest rate to do that. And letting them do it for you kind of just takes that responsibility off of your back. So why not let them do it for you, right? It'll just go into that escrow account. They will take care of it when those bills come out. There can also be an additional element of your mortgage called PMI, or private mortgage insurance. You have to pay PMI if your down payment on your property is less than 20% of the purchase price. So I'll be honest, most of the younger first-time home buyers that I've worked with in my time as a realtor, if they don't get some type of first-time home buyer's loan that gets rid of the PMI for them, typically they end up paying PMI. 20% down can be a huge chunk of change, and it's typically not something that first-time home buyers have access to unless they've saved diligently for a really long time. So you shouldn't necessarily, if buying a home is a goal of yours and you don't have 20% down, you shouldn't necessarily let this stop you. But it is important to know that it's going to be part of your payment. How much it is will depend on a few different things. Your loan amount, how much you're borrowing, how much you put down, and also your credit score. So the idea here is that the more risky you look to the bank, the higher this private mortgage insurance payment will be. Once you hit 20% in equity, that will go away. So that's a plus. You get to 20% and that will fall off of there. PMI does differ slightly when you change up loan types. For example, with an FHA loan, which is a government-backed loan, it's not called PMI, but it's called MIP, which is the mortgage insurance premium. So when you're working with your lender and figuring out what type of loan is going to be best for you, just make sure they fully explain, if there's going to be PMI or MIP associated with that, and have them give you a good solid idea of what that payment is going to look like. Because again, we have to plan for these things appropriately if we're going to keep our monthly housing payment under 30% of our monthly net income. So when you are shopping for a loan, you should be cognizant of your credit score. I'm sure we know the better your credit score, the better your interest rate will be. So having a good credit score can save you money on your home. So you should be, figuring out these types of things, I would say maybe even a year in advance of purchasing a home. Check out your credit score. See how clean your credit report is. If there's anything on there that shouldn't be on there, you can dispute that and get it taken off. It might bump your score up. And when you're ready to start shopping for a home, figuring out what even are current interest rates. Your realtor and your lender at that time can help explain it as they're talking about, market conditions and where things are at the moment. Right now, rates are hovering around 7%. And to give a little context there, rates about a year ago were at 3-4%. So rates have went up quite a bit in the last year. I'm sure we've heard the buzz around that. And of course, your rate specifically could be higher or lower based on your situation and how good your credit score is. If you currently have a poor credit score or don't even know your credit score, there are resources out there. And we can also help you figure out these things in a one-on-one appointment. That is a big part of what we do here. Of course, our one-on-one appointments can be scheduled through Starfish for currently active students. If that is not you and you don't have access to Starfish, you can always email us at finlit@psu.edu. There are options when it comes to how long you want to be paying this mortgage. Options range from 15 to 30 years. Typically 15, 20, and 30 years are like the most popular options. So with a 15-year mortgage, typically they will offer you a lower interest rate than you would get with a 30-year mortgage. So you'll pay less interest because of that. And because the loan has been condensed in a shorter period of time, you'll also pay less interest because of that. That will give you the opportunity to build equity in your home faster, but at the same time, your monthly mortgage payments will be larger when you go with a 15-year mortgage. On the other hand, there's also 30-year mortgages. These are probably like the most popular because of course they do have smaller monthly payments. They're a little bit more manageable, and especially for first-time home buyers, a lot of times we can't afford the 15-year monthly mortgage payments, right? Something you can do here with the 30-year mortgage is to try and pay it off a little early by making extra payments when you can. If that is your plan, you want to make sure there's no prepayment penalty in your loan documents. That is something that you would want to verify with your lender. And this has some flexibility, right? Just as if you think of a student loan or a credit card, there are posted min- minimum monthly payments. That's a tongue twister. Um, but you can pay more and you can save yourself some interest by paying more, some more. So that is absolutely an option with something like a 30-year mortgage as well. Another mortgage option to consider is whether you'll be taking a variable rate or a fixed rate. With a variable rate mortgage, the rate will vary at some point, hence the name. Most variable rate mortgages will be fixed for a set period of years, like for the first 7 years or for the first 10 years. That rate will stay the same. Then it will vary from there. So if you've got a 7-year variable rate mortgage, that means on year 8, it will change, it will vary. And what it does will be tied to the rate environment at that time. So if rates are generally higher, they'll be higher. If rates are lower, it'll drop down. Fixed rate mortgage is just that. It's fixed. The payment will remain the same for however long that loan term is. So if it's a 15-year fixed, that payment, or I'm sorry, that rate is going to remain the same for that entire 15 years. If it's a 30-year, same thing. It's going to remain the same for the entire 30 years. So when people think about mortgages, I think typically they have the fixed rate mortgage in mind. Again, these are kind of inflation proof, right? Because your payment is going to stay the same. Taxes might make it go up a little bit. Otherwise, it's going to be the same. And think about a span of 30 years. Your income might go up significantly, right? Like if you buy your house and you make $40,000 a year and it's a comfortable payment for you at that time, and you keep that house, 15 years down the road, you're likely going to be making much more, hopefully, right? So in that way, maybe your mortgage payment will become a smaller piece of the pie as your income grows. Whereas with rent, in the span of 15 or 30 years, a rent payment would certainly go up in that span of time. So when you have all of your ducks in a row, you've got your pre-approval, you've been shopping around, you've found the house for you, it is time to put an offer in. And this can get exciting, right? Your offer will include not only the purchase price that you're offering to pay for the home, but also what inspections you're getting. I would encourage home buyers always, always, always get a home inspection. You want to know what you're getting into when you're making a big investment like this, right? You want to know if it has issues, what those issues are. When you elect to get an inspection, you also get what's called an inspection contingency. And that means that if you do your home inspection and the inspector discovers something terrible that makes you no longer want to purchase the home, you are allowed to leave that contract. When you put an offer in on a home and you come to an agreement with the seller and you're under contract, you are, you're just that, you're under contract, right? And you can't easily break a contract. But an inspection contingency gives you the ability to do that if something bad is discovered during the inspection. So always get a home inspection. That is very important. Another part of your offer will be what amount down you have. You'll have to disclose who your lender is. You will also include an earnest money deposit with your offer. And an earnest money deposit basically just acts as security for the seller, keeping you on the hook in this legally binding contract. So we typically recommend putting in at least 1 to 2% of the home's purchase price as earnest money. That will sit in an escrow account, which, if you remember, it's just a holding account, and it will get credited back to you at closing. So it acts as a security deposit for the seller that you're not going to just break this legally binding contract and go off and buy a different house or something. We did touch on the inspection contingency. If you leave via the inspection contingency, leave the contract, you will get your earnest money back because that is a legal reason to leave the contract. You are allowed to legally break it in that case. If you illegally leave the contract, however, the seller does have the option to keep that earnest money. So it's important that you're not even making the offer unless you're really sure about this property and, how it's going to affect your finances, that you're comfortable with it. You really have to be sure at this point. And last but not least, you'll include an estimated closing date in your offer. And of course, your closing date is the day the keys are transferred. That home is yours on the closing date. So aside from the application fee that I mentioned earlier, most costs will be paid at closing. So when you're sitting down to sign all of your paperwork, you'll have to bring a cashier's check, and it'll probably be a big chunk of change. It'll be your down payment and your closing costs. Your down payment can be 20% of the purchase price. That would be fabulous. If not, remember that you will have to pay that private mortgage insurance. But also your closing costs. And I think people tend to forget about closing costs. So this is completely separate from your down payment. They typically range from 3 to 6% of the home's purchase price. So they can be a little pricey. If you are short on funds and you really only have the funds for your down payment, but not for your closing costs, you can ask the seller to pay a portion of your closing costs. And of course, that would be a part of your offer. When you submit that offer to purchase, if you need it, you would ask them to pay a portion of those closing costs as well. They don't have to agree though. And of course, your moving expenses. You want to be able to budget and plan for those, especially if you're making a big move across country or across the state. So this is the fun part, right? Repayment begins. So let's say this is what Ed settled on, and this is his loan amortization schedule. We can see that his first payment started July. So we can assume because of that he closed sometime in May, right? Let's say he closed May 15th. He has the remainder of May, all of June, and then his first payment will start on July 1st. So let's say Ed got his house for $165,000. He has a fixed interest rate of 4.25%. He elected the 30-year mortgage term. His monthly payment is $811.70. And the total interest he's going to pay over the life of this loan, if he doesn't make any extra payments, is going to be $127,000. So even that number alone can show why it might be advantageous to make some extra payments, if you're able to. Notice here, looking at the amortization schedule, that with each payment, principal increases slightly and interest decreases slightly. So he is slowly chipping away at that balance. And if you think about a 30-year loan, it could take a long time, right? 30 years if there are no extra payments made. So that was a lot. Ed is overwhelmed, and you may be too. Home buying is a huge undertaking financially, mentally, it can be. And I will say there are a lot of resources out there that can help you through the home buying journey. Even if you're not ready to connect with a realtor or connect with a lender, there are a ton of resources out there. The Pennsylvania Housing Finance Agency has some really great stuff on their website. Of course, we can also help you with these things. Our website is here on the screen. Again, if you have access to Starfish, you are able to schedule an appointment right through Starfish. And if not, you can email us, finlit@psu.edu. Again, here are just some other ways that we can help you in the Penn State community manage your finances. So that is all I had for you today. It looks like we do have about 10 minutes left. I'll just say I hope you enjoyed today's webinar. And for all of you soon to be first-time home buyers, good luck out there.